Welcome to Think Like a Saver, Buying Your First Home. Settle in as our America Saves team and industry experts share relatable tips, knowledge, and resources that will help you be an informed and empowered homebuyer. Today you'll walk away inspired with concrete next steps, armed with the knowledge to confidently begin your path to homeownership. This virtual town hall is for you. We encourage you to take lots of notes, share, leave comments, and ask questions. But most importantly, get the support that you need to take the exciting step toward buying your first home.
Thanks for joining us for the Think Like a Saver, Buying Your First Home Town Hall. Now, if you've attended any of our previous town halls, you know that you are in for a treat. Several times a year, America Saves brings together dynamic experts, influencers, and speakers to bring you real, relatable information, tips, and strategies around one subject. We chose buying your first home because we know that purchasing a home is a financial goal and a wealth building strategy for many of you, our savers. And today we're committed to helping you navigate what is possibly the largest financial investment you'll make, and to help take some of the mystery and uncertainty out of what can be a very confusing process. In addition to that, just because you're here with us today, you're eligible for two opportunities. First is the ability to be paired with a financial coach or counselor at absolutely no cost to you. So our friends at AFCPE and the Coordinated Assistance Network have made the opportunity possible to you. And all you have to do is sign up at the link below, and then we'll put that in the comment section, and then be sure to tell them that America Saves sent you. The other great opportunity that you have is our Think Like a Saver sweepstakes, which are five $500 cash prizes that we're giving away to our savers. All you have to do is be eligible by commenting with your top takeaway from today's town hall in the comments, either on Facebook or on YouTube, depending on where you're watching, in the next 24 hours, okay? So be cognizant of that time. And you have to take either the America Saves Pledge or the Military Saves Pledge within the last 12 months. Now, if you're unsure if you've taken it, then go ahead and do so. It won't hurt to take it more than once. Now, chances are, if you're here, you are considering buying a home. So as you're taking the America Saves Pledge or Military Saves Pledge, be sure to choose home ownership as your goal so that you can receive tips, support, and resources directly from us at America Saves to help support you in buying your home.
My name is Robert Pugh, and this is my wife.
I'm Emily Pugh, and we are
the Pugh family.
The Pugh family.
Yep. And we have 3 kids. They're currently 8, 9, and 16. Mm-hmm. The boy is the middle child. So we bring all 3 of those. We've been in the military for about 16 years. Mm-hmm. We've traveled all over the country and all over the world. And actually, North Carolina was our first duty station, and we are back here at North Carolina as hopefully our last duty station. So we'll see if that works out for us or not. I'm a saver.
Yeah.
So, I mean, our relationship is spend and save.
Yes.
So we balance each other out. I grew up with the mentality of once you know your current cost of living, every time you get a pay raise, that doesn't mean I get more stuff, bigger cars and bigger things and payments and monthly. I don't do all that. I pay debt off, I save it all, and I build up. We had a roof. The whole roof was ruined. We actually purchased the home, and first-time home buyers. And in the midst of buying that, it was about 2.5 years later, and we were looking at selling the house or renting it, but we had an appraisal come through, and the roof was
$10,000.
10 grand. We had to replace the whole roof.
We were not ready for that.
No, what the state law required when we purchased it originally, the state law required the roof to only be okay for 2 more years. And then 2.5 more years later, we got it appraised, and the state law changed, and they were like, oh, this roof's totally bad, and it was $10,000. Don't let yourself get too frustrated when the answer is not simple. So be patient with those that you ask the question of and be persistent in asking others. But keep trying because someone wants to teach you.
And if you can't figure it out, marry a saver. And go to americasaves.org.
That's right.
Take the America Saves Pledge and choose your savings goal by visiting americasaves.org.
As you can see, I'm now joined by my colleague, Amelia O'Rourke Owens, Associate Director of America Save. Amelia, let's kind of frame the home buying life cycle for our savers.
Sure, Kia. So as you mentioned, buying a home is a pretty large undertaking, and it's a process that can be tough to navigate. But we want our savers to break it down and think of it as 3 steps. So first, make the decision, which means that you've weighed all the pros and cons on buying versus renting, you've done your research, and you're what we call an informed and an empowered saver. Second, it's all about preparation. That preparation starts with knowing and maybe improving your credit score, and then saving for a down payment, and in all of our steps, research again. And then finally, there's the shopping phase. You're shopping for a mortgage, a real estate agent, the home, insurance. It's fun, but it's stressful.
All very true. Definitely fun, definitely stressful. Now, over the course of today's town hall, we'll be diving deeply into all 3 of those phases. But let's start with the very first phase, which is making the decision. So our team at America Saves is always discussing savings, finances, and topics that affect and are important to our savers, homeownership being one of them.
That's right. And some of the experts on our team feel emphatically that you should take your time with the making the decision phase. And that's because even though we've been told that homeownership is the American dream and the bedrock of building personal wealth, the truth is that homeownership may not be the best financial choice for everyone.
Right. And that's not to say that it's not a good fit for them because they don't qualify. There are a lot of people who qualify just fine, but maybe they live in an area where the market is bananas, or maybe they're a military family who moves a lot. We're definitely seeing a seller's market in most markets, and even in some places, an increase in rent prices. So let's hear from one of our savers about a question that they have when it comes to buying a home.
What are some things you should think about when you're considering buying a home?
This is a great question. And first, your financial stability, especially if you're in an industry with high turnover or you're working temporarily as a contractor or in the gig economy. You want to know that you can afford your mortgage and your home repairs years from now. Another thing to consider are reserves. So your home will need its own emergency fund that can support you if there are major or even minor repairs that you need. And then finally, you don't want to be in a situation that my mom calls house poor, where all of your money is going to your home. So just because you're approved for a loan at a certain amount doesn't mean you should max that out. Consider your current lifestyle and if you'll be able to maintain it with those kind of payments. Are you going to have to stretch and give up a lot of what brings you joy? Then maybe wait or buy at a cost that's lower so that you can still enjoy those other things too.
Absolutely. So there's the question of if homeownership is right for you right now, but then there's also this other nagging question for many marginalized communities of if homeownership is even attainable for them, right?
Right. And we'd be remiss if we don't consider that for many Black and Brown people in this country, there is a disparity in homeownership as a result of systemic forces. Huge factors influence communities of color, such as credit, the wealth gap, and existing racial inequities that make the idea of homeownership that much more daunting.
So true. So today, we are committed to arming you with the information, the tools, and opportunities to help mitigate those barriers that impact you, like getting a financial coach or counselor, or sharing ways to improve your credit score, and access to resources like housing counselors and your local down payment assistance information.
That's right. After you make that decision and you're confident that buying a home is right for you, it's time to prepare. I'd like to introduce Stephanie Williams, Deputy Director at the Office of Outreach and Capacity Building at HUD. So Stephanie, a great resource as you're preparing to buy a home is a housing counselor. Frame for us the mission of HUD's Office of Housing Counseling and explain how they support home buyers.
Yes, absolutely. Well, the mission of the Office of Housing Counseling is to help families and individuals to obtain, sustain, and retain homes. And the way they do this is through a network of housing counseling agencies that are staffed by HUD certified housing counselors. The housing counseling agencies are located nationwide.
And what exactly do housing counselors do, and how do they support home buyers?
Great question. Well, what housing counselors do is they meet with individuals and they review what their housing needs are, what are their housing goals, and they provide specialized expertise, and they customize it to address whatever people's unique housing needs and circumstances are. The housing counseling session from start to finish involves intake, getting sort of basic information from the client, finding out what it is they're looking to do, whether it's a rental situation, they're looking to purchase a home, they're facing foreclosure, delinquency, just get a good understanding of what the individual's needs are, and go through an affordability and financial analysis and a budget. A budget is key. Every housing counseling session needs to do that. The counselor then creates an action plan for the client and engages in follow-up throughout.
That's great. I mean, housing counselors are tremendous resources for our savers at home. So let's hear directly from Larry Chapman on how housing counselors can help you buy your first home.
A housing counselor helps prospective home buyers navigate the home buying process from start to finish. The best time to meet with a housing counselor is very early in the process, when you're starting to consider whether buying a home is right for you. The counselor can help you determine whether your finances are in good shape to get approved for a mortgage and also to afford the ongoing expenses of home ownership. Together, you will examine your credit history, your current overall debt, the amount you have saved towards a home purchase, and how large a monthly mortgage payment you can afford. They can also introduce you to the range of mortgage financing options available, including those that are geared towards first-time home buyers. Typically through a combination of one-on-one meetings and first-time home buyer classes, future homeowners learn about such topics as the pros and cons of home ownership, finding a home that meets their needs and their budget, making an offer to purchase, getting a home inspection, the closing process, and finally some of the legal, tax, and insurance considerations of home ownership. It sounds like a lot to learn, but a housing counselor is ready to help. You can find one near you at the link below.
I'll be honest, guys, I've worked in the mortgage industry for several years in a past life, and I have personally bought homes before, and I have never heard of housing counselors until we started brainstorming for this town hall. So thank you, Amelia, for kind of putting me on to housing counselors. Thank you, Stephanie, for sharing with us about that great resource as we kind of get our savers prepared to move to the next phase of preparation, which is, even though they have this support through housing counselors, still wanting them to kind of do that own independent research, right? And evaluating all the loan options so that they are, again, that informed, empowered saver. So it's important to know that there are loan types outside and beyond just the conventional loans. You could be eligible for government-backed loans like those from VA, FHA, or USDA. So Stephanie, can you share kind of a high-level overview of some of those benefits and maybe even some of the risks for government-backed loans?
Sure. Well, of course, out of HUD, the loans that we're referring to specifically are FHA insured loans. And the benefit of a FHA loan and other government-backed loans is that the lenders that provide the loans are insured by the federal government, meaning that there is less risk to the lender for making the loan to certain homeowners. And what the benefit is if for some unfortunate reason the homeowner defaults on the loan, the lender will be compensated, which means that the lender can take a little bit more risk in making loans to individuals who might not qualify for a conventional mortgage. Some of those benefits to homeowners are lower down payments and credit scores. There may be a little bit more flexibility with the credit score that a home buyer needs to have with a government-backed loan.
Absolutely. And I'm glad you said that at the end. I wanted to flag for folks who are thinking about buying their first home as they're making the decision and as they're preparing and doing that research. If they see or hear federally backed loan, that's what they're referring to, what you just described. So any final thoughts for us, Stephanie, about preparing for home ownership?
Well, I'm glad that I was able to shed a little bit more light on what housing counseling is. It really is a tremendous resource for people, whether they are interested in purchasing, even if they're looking to strike out on their own and rent an apartment, if they want to just know if they can afford it, if they need assistance with budgeting. Worst case scenario in a rental scenario, for example, if you're having trouble with your landlord or other issues that may crop up with rental. And then, of course, this is something that we saw many years ago, but when the foreclosure crisis hit very hard, housing counseling agencies were able to assist homeowners in either getting adjustments to their mortgage payments or, if necessary, having to walk away from the home in a way that didn't damage their credit and their possibility for housing needs in the future. The other thing that I'd like to say about housing counseling agencies is they are approved by HUD, meaning that they need to meet certain criteria when they join the program. They are vetted in terms of their capability, and they're monitored throughout. HUD also provides a lot of assistance and training to housing counseling agencies to support them in supporting the clients. Also, housing counseling agencies charge either no or very minimal fees to homeowners and renters and others who are looking to address their housing needs. So that's a benefit as well. In addition to individual sort of one-on-one counseling, group education is offered. You'll see this in terms of pre-purchase home buying classes, going through the gamut of what's involved, whether it's going through your budget, getting an inspection, learning about the different types of mortgages, things of that nature. It's usually an 8-hour class or so. So to get more information about housing counseling agencies, you can go to www.hud.gov and click on the link for housing counseling. It enables you to find out where housing counseling agencies are offered in your area by zip code or by city. And you can speak with a counselor to see how they might assist you.
Next, let's invite Mitria Wilson-Spotzer, Director of Housing Policy at Consumer Federation of America. Mitria, the first step of preparation for buying your first home is credit. What do folks need to do and know about their credit in order to buy their first home?
Well, Amelia, the first thing that people need to know is that credit matters. So when it comes to buying a home, the first thing that lenders will look at is your credit history. So you have 3 credit scores from each of the credit reporting bureaus, TransUnion, Equifax, and Experian. The way that the lending process works is that your lender will look at all 3 credit scores. The highest credit score will be dropped, and then the lender will average the remaining 2 credit scores to determine what your credit score is. The reason why this matters is, depending upon your credit score, it will determine what lending products you actually qualify for. So most first-time buyers actually go with the Federal Housing Administration's loan program because it's very friendly to first-time buyers. The way that program works is there's a minimum credit score of 500, but if you have a credit score that is below 580, you're required to provide 10% down. Most first-time buyers don't actually have the 10% to put down. And so the FHA offers a program where you can put 3.5% down if you have a 580 credit score or above. This is traditionally what we refer to as the first-time buying program at FHA.
Such great information, Mitria. Because a lot of people think that if you have what's considered a lower credit score, then that's it, that you're out of options. But not only are there, some flexibility in different types of loan types, but you can also be intentional about raising your credit score yourself. In fact, America Saves has created a YouTube playlist of some of our greatest hits, some of our expert tips and strategies to improve your credit score. Obviously, results can vary, but this is something that people can be strategic about and do themselves without necessarily having to pay a credit repair company. So we'll share the link to that credit YouTube playlist for you all to enjoy. Now, Mitria, we've talked about conventional loans, and I know you have a caveat that you want to talk to us about conventional loans, but when we talk about conventional loans, we're saying this is a fixed term that's usually 30 years, but could be, 20 or 15. And this is also a mortgage with a fixed interest rate. Now, if people decide to go in a different direction than that conventional loan, what else should their considerations be?
Well, because we're targeting first-time buyers, my advice in this situation is don't. The reason why we call conventional loans conventional, because they are mortgages that are safe for the consumer. A 30-year fixed-rate mortgage allows the consumer to have payment consistency and understanding what their monthly obligations will be for the term of the loan. Adjustable rate mortgages, which would be something that would fall outside of the conventional rubric, have the kind of necessary but negative impact of having payment shock, right? Because you go for, let's say, 5 years and your mortgage payment is $800 a month, and at the end of the 5 years, because of the adjustable rate mortgage and the interest rates have gone up, your $800 payment goes up to $1,500 a month, right? And so the reason why conventional loans are so important is because by fully amortizing the loan, which is taking and standardizing the payment for the full loan term, it's able to stabilize the mortgage payment for the consumer, to make it safer and more predictable and ultimately more affordable.
Those are great points, Mitria, and being able to know what you're going to be paying each month is so important. But another barrier for some folks in buying their first home is that down payment. And I know you mentioned with the FHA loan that can make it a lot more approachable, but a lot of our savers have a question about down payment. Let's hear from them now.
Okay.
Is your only option for buying a home putting down a 20% down payment?
So savers need to consider how much money they have to put down. And Mitria, if they don't have that standard 20% to avoid the private mortgage insurance on some conventional loans, what are their options?
Yeah, I'm glad you asked this question, because I think one of the biggest misconceptions out there about home ownership is that you have to put 20% down. There are a number of programs, including those programs that are backed by the federal government, that allow people to enter home ownership without putting 20% down. So what I want to start with is what we talked about a little bit earlier, the FHA program. So for the Federal Housing Administration, those loans only require 3.5% down as long as the borrower has a 580 credit score or higher. And then once again, that credit score also depends upon what the lender ultimately decides is an acceptable risk. So it may be that the credit score is required to be 620 because of the lender's preference. But we can start there, and we can say that you could have 3.5% if you go through the FHA. In addition to that, one thing that I think a lot of people overlook is their state housing finance agency. So your state housing finance agency actually gets funds from the federal government to create home ownership opportunities. And as part of creating those home ownership opportunities, what they do is actually subsidize the mortgage. And the way in which they subsidize it is by decreasing the amount of down payment that's required. So you can go to a state housing finance agency and they can offer either down payment assistance or they can offer a mortgage loan that requires less than 20% down. So that's another good resource to look at when you're looking at ways to save up for a down payment. The other practical way that a lot of people do is they reach out to their family members. They reach out to their family members for help. In coming up with the down payment. And not all of us are fortunate enough to have family members who are able to help us meet those needs. That's where it really becomes important to look at the programs that are available in your community. A number of nonprofit organizations as well as state agencies offer down payment assistance programs. And those programs will allow you to get funds towards the purchase of your house. Usually if you complete a home ownership counseling program or a first-time buyer seminar with the agency as part of the process. I think that's a small price to pay to ultimately be that much closer to getting into your home and having the money to be able to do it. And the reason why this ultimately is really important is that you don't want to expend all the money that you have on the down payment. And the reason why that matters is because in the first year of home ownership, you have to have some sort of cushion for all the expenses of home ownership that we don't take into account. There's almost invariably some kind of repair that needs to happen. Right? Or you have some preferences about upgrades that you want to do. There are costs that are associated with being a homeowner that you just don't have as a renter. So that you need to have funds available to be able to pay for those so that you can be able to navigate your first years of home ownership successfully. So I always encourage people to look within their community. Start at your state housing finance agency, start with your housing counselor, a HUD approved housing counselor preferably, and ask for whatever resources exist in the community to get down payment assistance. Another good place to look is with your employer. A lot of employers actually offer down payment assistance as part of their portfolio of options for their workers. And so this is another opportunity where you can get funds. The last place, and I don't want to be too long-winded, but the last thing I want to talk to you about is a lot of people consider using their investments, their retirement funds, towards a down payment. This is a feasible avenue, but to be honest with you, it's an avenue that you should avoid as much as possible. Taking out investment funds for this purpose ultimately makes you a little more susceptible to risk ultimately in retiring. So what I would suggest is if an individual is looking at their investment account, their retirement account as the source of their down payment, rather than removing the funds, if at all possible, and as a last resort, I would recommend actually taking a loan out with the funds as being the kind of collateral for the loan, and paying back the loan towards the investment rather than pulling the funds out themselves, so that they can continue to accrue the interest that they need to accrue, so that you can have the funds later on to live off of.
You've given some great tips there, Mitria, and I love, first of all, that you broke down that you don't have to have 20% down. That's a myth, that there are a lot of other loan products out there, but also that no matter what that metric is, whether it's the 3.5%, whether it's the 10%, or whether it is the 20%, save that and then look for those cushions. And, you know, one of the cushions that you mentioned are state housing finance agencies. And a great resource that our savers can use, the link it will be in the chat, is our down payment assistance resource compiled by Natalie Campisi, the mortgage and housing analyst at Forbes Advisor. She did all of this research. It is current, and this can help you find these resources available in your community. So you don't need to know what state housing finance agencies are necessarily, but as Mitria has pointed y'all to, you can use this resource from Forbes Advisor to try to find these in your state.
Mitria, I have a quick curveball for you because I know we've talked a little bit about conventional loans. We've talked a lot about FHA loans. What about like VA and USDA loans? I know for VA, you have certain eligibilities for that. I know we have a lot of military in our audience. And then what is the big thing to look for if you're going for like a USDA loan?
Yeah, no, I'm so glad that you mentioned these because these are actually really important loan products that have some very desirable benefits. So let's start with VA. I happen to be a military spouse, so I'm really excited to talk about this program. The one big benefit of VA is that there is no down payment requirement. Since we know that down payment is obviously the most significant hurdle for a lot of buyers in the process, the VA loan eliminates that because there's no requirement for a down payment amount. Now, even though there's no down payment requirement, there is a loan funding fee that is 1.8%, I believe, of the loan. That you do have to come up with. But once again, when we're talking, we've had this conversation, we've been talking about 20%, 10%, 5%, 3.5%. 1.5% is a whole lot less, right? So in order to qualify for a VA loan, you have to be either an active duty service member, or you have to be a veteran who qualifies for VA loan benefits. So you previously served within the required time period. And were honorably discharged by the United States military, or in certain instances, the surviving spouse of a service member may independently qualify to receive a VA loan. So the USDA loan programs are a little bit different in that they are targeted towards agricultural communities, rural communities in the United States. Once again, these are desirable loans because they have nice loan features in the sense that they have lower down payment requirements. With respect to the USDA loans, the other reason why people tend to look at them is that they are not necessarily loans that are focused on a home exclusively. So with a USDA rural loan, we can focus on actually buying farm property, larger lots of land that may have uses other than just home ownership. So when you're looking at if you're interested in purchasing in a rural area and the value of the property is not just the home itself, but in fact the land at a larger area, then you would be looking at a USDA loan. The reason why those loans are desirable is with traditional mortgages, they're often just based on the value of the home itself. But we know that the value of the home itself in rural communities where there is land, and that land has its own independent purpose or revenue stream, that the value of the property can actually be much higher. And the USDA program is designed to specifically look at that and accommodate consumer needs.
Such great information. I know we have such a diverse audience, so it's really good to hear what they may be eligible for depending on where they live or if they served in the military. So thanks for that background. And I think this is the perfect time for us to move to the next phase of buying your home, which is actually shopping for the loan itself and choosing your lender. So let's start that conversation. So up until this point, we've gone through phases of determining if homeownership is right for you and preparing for that mentally and financially. And now you're ready to start shopping for a home, right? So when you think about buying your home, a lot of people immediately go to actual house hunting. There are even TV shows that are centered all around house hunting. But you know what? There should be shows about mortgage hunting. So the same energy that we put or that people put toward finding a home, that meets their needs, we should kind of keep that same energy for finding a mortgage. And so let's spend some time chatting about that. I'm joined by two experts. We're going to explore how to shop for a lender. So I'm joined by Clarence Haynes, who is a financial education instructor at Edelman Financial Engines, and Natalie Campisi, the mortgage analyst at Forbes Advisor. Thanks so much for joining me, guys.
Thanks, Kia.
Thank you. Yes, glad to
Of
be here.
course.
Excited about doing this.
So let's jump right into this, okay? Because it is probably mortgage shopping is the most important part of the home buying process. I'm sure you'll agree with that. And there's a lot at stake if you gloss over this step or don't take it as seriously as you do buying or picking out your actual home. So, Natalie, let's start with you. What advice would you give to our savers about how to choose a lender? Do you just go with your bank or whoever you're banking with, or do you go with who your real estate agent suggests? Like, how do you navigate that?
Choosing a lender is such a crucial step in the home buying process, especially if you're a first-time buyer and you've never done this before. Um, a great lender can help you in many ways. First of all, you want to shop around for rates. So you want to look at low mortgage rates, but you also want to look at the APR, which is sort of the all-in cost of the loan, the lender fees along with the rates, that sort of thing. So that's kind of the basic thing that people think about, like who has the lowest rates. But there's more to it than just low rates. An experienced lender, especially working with a first-time buyer, can kind of navigate you through that process. If you have a lower down payment, let's say you have less than 20% down, or even maybe less than 3.5%, which is what some of the low down payment loans require. A good experienced lender who's worked with first-time buyers can point you in the direction of down payment assistance programs or grants or things like that. So you really want to shop around for a great lender. You want to, ask your friends, ask your network, read reviews. And then when you finally, maybe whittle down a list of a few lenders, ask them questions, ask them what their experience is with working with a first-time buyer, or maybe you're self-employed, which has its own hurdles, ask them what their experience is with those types of lenders. And that's going to be really a key asset in getting a loan that's right for you, a loan with, low rates and that sort of thing.
And I know you have a really great resource for down payment assistance that we are going to link in the comments. So thanks for that, Natalie. Now, Clarence, now that we kind of have a background on what our savers need to know about the different types of lenders that are and loans that are available to them, what is the difference between lenders themselves, the different kinds that there are? There are financial institutions, there's mortgage brokers. What should they be looking for and know about the difference between them?
Yeah, great question. First of all, I just want to add one thing to what Natalie said. I think one of the key things she said is that you want to find a lender who is familiar or works with people in your similar circumstance. So if the lender only works with multimillionaires and you come along and you're not one of those, then maybe he may not give you the level of service that you're looking for. So I just thought that was a great point. I just wanted to add that to it. There are different types of ways you can go about finding a lender. And one is to use a mortgage broker. And really what a mortgage broker is going to do is going to submit your loan to a variety of different lenders. And what they're going to basically do is help you, or do it for you in a sense, shop for the best and most competitive mortgage rate and the best terms that are available to you. And so they can help you, especially sometimes if you have a specific circumstance. Maybe you don't have 20% down. Maybe you don't have a 800 credit score. Then a mortgage broker might be a good place to start, because they can help you with those types of specialized circumstances. From there, though, you also have direct lenders, which are going to be like going direct to the person who's lending you the money. One of the things to understand about a mortgage broker is that they're not the ones who make the final lending decision. So they're like the middleman that's going to connect you to the person. But also, so if you want to go skip that, then you can go to the direct lender. So that's like going directly to your bank or directly to your credit union and applying directly with them in order to secure a loan. And then you also have the secondary market lenders. So that you may have heard of things like Fannie Mae or Freddie Mac, and these are programs that or places you can go to also try to find a lender to help you secure that first home of yours.
Mhm.
Really great information. One question that I have from that, Clarence, is if you go with a mortgage broker,
hmm
are they pulling your credit score just once? Are they pulling it different? Like, does everyone pull your mortgage score that they submitted to? How does that affect your credit?
Well, the good thing is that if you're shopping for a home and you are applying for a mortgage, credit unions typically know that you're not just going to go to one mortgage company and apply. Chances are most people, if they're doing their due diligence, they're going to look around. They're going to try to go to maybe, let's say, 5 or 6 different mortgage companies because they're shopping for the best rate, which is advisable. It's a smart thing to do.
Mm.
And the good news is that those types of credit pulls, as long as they're within usually they're not going to impact your credit score at all. So don't worry about that. It's not like you're applying for 6 different credit cards. That's a whole different story. But you're applying for one mortgage, but you're doing that across the variety of lenders, so they understand that, and it's not really going to hurt your credit score at all.
Yep.
Really good info.
Mhm.
So, okay, so you're shopping for a mortgage and you're comparing different lenders. Natalie, what questions should you be asking them as they are looking for their best fit? And also, what red flags should you be looking for to know that, oh, this is probably not someone that I would want to use, if any?
These are great questions. When you're shopping for a lender, you want to like, as I said before, ask them questions about their experience. How what is their experience with the type of buyer you are? How do they go about helping these buyers? The other thing is, once you just start having a conversation, you'll get a sense of I think you'll get a sense of the person. If you're a first time buyer, you're going to probably need more hand holding. There are a lot of little details in getting a loan that you're probably not aware of. Things like you don't want to kind of mess with your credit score, because if you're, pre-approved for a certain rate, it's based on your credit score. But if a week later you turn around and buy a bunch of furniture or buy things, that's going to have a negative impact on your credit score, and it can change the rate you're going to get. A good lender will kind of explain those things to you. If the lender is busy or is not calling you back, that sort of thing, then that might be a red flag that, okay, this person doesn't have the time that I require for my loan. So you really want to sort of get a sense of that. Again, word of mouth, recommendations, Yelp reviews, whatever it is, those things are also going to be, great helpers in finding that lender. Some red flags in today's market is maybe over promising. This is a very competitive landscape. Everyone's getting a loan. People want to refinance, so lenders are trying to get your business. They might over promise, so they might say that, oh, well, we can close in a super short period of time. You're seeing these like 14-day closings and things like that. That's a red flag. Usually closings can be between 30 and 45 days. So if they're promising things that seem a little strange, or other lenders haven't promised, in your kind of pre-lender interviews, you might want to double check, verify that information is accurate.
Really, really good call out, especially for most of our savers that are watching. It's going to be their first time, so they may not
Mm.
have that kind of background knowledge of this is supposed to take more than just 2 weeks
Yeah.
to get it done. So thanks for that.
Yes.
Now, once they've made the decision, they've decided who's the best fit for their mortgage, it's time for that next step. And you might have noticed that with this conversation between the three of us, we haven't even gotten to actually looking for a house yet, right? We're still on the mortgage. Now, let's be realistic here. We are real people. We do know that you are already looking, even though we haven't gotten to that step yet.
Right.
We know that you're looking.
Yep.
But let me
That's the
tell
fun
you,
part.
exactly. But
Yeah.
it does no good to be out here looking at these dream homes if you aren't
Mhm.
sure that you are even approved for the loan. So
Right.
really quick, we are going to have a question from one of our savers that I'll be interested to get your take on, Clarence. Let's
Sure.
listen to see what Sarah's asking us.
What should you do first? Get a pre-approval or get a real estate agent?
Okay, so Sarah was really soft spoken if you didn't hear that question. She asked, what kind of comes first, the pre approval or the real estate agent? Clarence, why don't you answer that question for us?
I feel like I'm answering the question, what came first, the chicken or the egg?
Exactly.
But
Yes.
in this instance, though, it's you want to get the pre-approval first. And the reason why is because it makes no sense to go and get an agent and go shopping for a house and go get all excited about the house. And then when you go get approved for the mortgage, you can't afford the house of your dreams. I think by getting pre-approved, the first thing you do is you avoid disappointment in the process. So this way you have full knowledge, so you're looking for homes that you know you can afford. And I think that makes the process a lot better. This way, when you see that dream home, which is the excitement in the whole process, at least you know, wow, I can actually afford that one. And it makes the process a lot more enjoyable instead of frustrating. It'll also save you a
Mhm.
lot of time. And one of the other things too is that if you have a very motivated seller and you come with a pre-approved letter, that might actually move them to move even quicker. So it's much. I guess if we're going to call we'll call the pre-approval the chicken, and we'll
Yeah.
call the we'll call the agent the egg. I guess I don't know.
Very, very good. And that kind of goes back to what we've talked about throughout this entire town hall about being a confident saver
Hmm.
or having financial confidence, right? When you're already pre-approved, you can look at any home with confidence and already know that you're
Mhm.
approved for that.
Right.
Now, for
Mhm.
our savers that are in this process, they might actually hear two kind of terms that are thrown around a lot. They might hear pre-qualification and they might
Right.
hear pre-approval. So, Natalie, can you explain the
Mhm.
difference between the two so our savers are really sure about where they are in the process, depending on if they have a pre-qual or a pre-approval?
Right. Yep. So pre-qualification is just sort of your very basic kind of assessment of how much you might be able to get approved for insofar as getting a mortgage. So you would just enter your information in a website, whether that's like your credit union or an online lender, and then they would spit back a number like based on this information you entered, this is what you would be qualified for. That's your pre-qualification, and it really doesn't go far when you're shopping around for a house. The pre-approval is a more robust step. This is where the lender actually goes through your finances, does a credit check, all of that stuff. So it is sort of a pretty good view of what you will be able to qualify for. And this pre qualification is your pre-approval, I'm sorry, is what real estate agents and things like that want to see when they're showing you homes. They want to know that you're a serious buyer and that you can afford the home before they show it to you and get into the next steps of putting, a bid in and that sort of thing.
So the best position for you to be in, savers, is to be pre-approved, not just
Right.
having that pre-qualification. So as
Hmm.
That's
you're
right.
shopping for a lender, whether you're, in that pre-qual stage or you already have your pre-approval, there are certain things that you'll want to be aware of, especially with the fees that the lender is
Mm.
charging you. So
Mhm.
Clarence, can you kind of share what are some of those customary lender fees? And
Sure.
are those fees like something that you could negotiate? What's too little? What's too much?
Mhm.
Like, give them a little bit of background on what to expect as far as what the lender is charging them.
Right. Well, some fees possibly can be negotiable, but not all.
Mhm.
But I'll give you a general idea of some of the fees that you may have to pay, and this is not all of them, depending on the type of property you're purchasing. There could be others, but One, you are going to pay an appraisal fee. And part of the reason why is because you need to know how much the house you're looking to buy is worth. So they need to do an appraisal. They need to make sure that what they're selling for, you want to make sure that you get a good value and the house is worth what you're actually paying for it. There's going to be an inspection fee. You don't want to move into a house that you have not inspected because that could be a potential landmine. I think there was an old Tom Hanks movie, Money Pit, I believe it was,
Yes.
where they bought this fixer-upper house and it just became a disaster. So you want to make sure you want to make sure that you are make sure you have a home inspection because you want to protect yourself. Another fee that you might have to pay is there may be a charge for a credit report if they have to do that. Document preparation fees. And then I'll give you one more, and then there's others, but like a loan origination fee. This is kind of where the lenders typically make their money, and loan origination fees can be around about 1% of the actual value of the loan. So these are some of the things you have to think about and pay attention to.
With your pre-approval, your lender has to disclose those things to you. They have to disclose if there's an origination fee, any application fees. And in addition to the fees that they're charging you, they are also going to give you an estimation of your mortgage payment. And it'll include like the interest rate that you've been quoted, the amount that you're pre-approved for. And it's important to note that it's possible at this stage that your interest rate isn't even locked yet, right? So in some markets, you can wait until you're under contract. Interest rates actually expire. So you want to pay attention to when your interest rate is locked, because you only have a certain amount of time before that interest rate is no longer any good and you may have to relock, and there may be even fees associated with that. Okay. So so note that when your interest rate is actually locked, but also know that just because you're pre-approved at, let's say, $250,000, that does not mean that you have to go get a home for that amount, right? That's like the top tier. So you can come in at a lower price than what you're actually pre-approved for. So one thing that our savers may notice is that your lender's mortgage estimation, so the estimation of what your payment is, may be vastly, matter of fact, it probably is. I'm almost certain that it's going to be vastly different than what Zillow is estimating. So if you're on Zillow and seeing like how much they said their mortgage payment is, chances are that's not the correct amount. So Natalie, can you share with our savers why that is and what their lender is actually including in that estimation of their mortgage payment?
The Zillow is not taking into account your particular circumstances. So there are so many different variables and moving parts in your actual loan costs. I mean, if you, for example, you have your down payment, your closing costs, and these are all contingent on the type of lender you have.
Yeah, and all markets are different. So a lot of markets and lenders add on escrow accounts so that your homeowner's insurance and your taxes are added to your actual mortgage payment. So those are definitely things that Zillow cannot account for and that they're not estimating that. So don't use that as what you should look for.
I would just add, other things to just be aware of are HOA fees, homeowner association fees. Depending on the homeowners association, they could be really great. They also can be very expensive, or they can be an absolute nightmare. So that's something you really want to research before you lock yourself into something like that. HOA fees can run between $50 a month to $400 or more a month. So it can be a big expense. And the other thing is, if you're in a flood zone, you could end up paying a lot more in homeowners insurance, and also any repairs if your home gets flooded or if there's a storm, that sort of thing. So that's something you definitely want to look into and budget and add to your budget if you decide to go that route.
That's where that
Out.
saving for emergencies comes in, right?
Yep.
And
Yes.
trying to have a
Hmm.
warranty
Yes.
on your home because there is the cost of actually living in the home and something is going to break. I promise you that eventually. So
Yes.
you have to be prepared for that.
That's
Even
true.
if you can afford the mortgage, can you afford for the HVAC to go out?
Yep.
That kind of
Can I
thing.
Let me throw in
Mhm.
one other thing about HOAs, because depending on where you live, the HOA can either enhance the experience or it can ruin
Yes.
the experience.
Yes.
Mhm.
Yes.
So if you are moving into an area that has an HOA, we live in an area now, and the people that it's not the it's the rules, there's a board, you got to
Mhm.
deal with all of that kind of stuff. So make sure you're comfortable in doing that if you're going to go that route, before you
Mm,
decide to do that.
yeah.
Because you can't necessarily just do whatever you want in your own
No.
home and you live in it when you deal
No.
with an HOA. So
No.
you got to
I
be
have a
careful of
friend.
that too.
I have a friend right now that wants to add a she shed to her home and she can't because of the
Yep.
HOA. She wants to build her. She has a business. She wants to have a she shed in the back for her office and she can't have
Hmm.
it. And that's
Right.
crazy. So we've talked a lot
Mm,
about Clarence. I can't remember if which you said was the chicken or the egg, but we've talked a lot about the actual lender. Let's jump to finding that real estate agent, okay, and what you should know. So shifting that conversation over another spot that should not be glossed over, finding a real estate agent that's a good fit.
mhm.
Hmm.
And I found that one thing that a lot of first time home buyers don't even realize is that it's customary for the seller to actually pay
Hmm.
for the buyer's agent. So keep that in mind. But Natalie, what are
Mm.
some of those other attributes that our savers should be looking for when choosing a real estate agent?
Oh gosh, a real estate agent is just as important as getting a good lender. They can make or break your experience.
Hmm.
You want to look for real estate agents that really understand your area, that you're looking in, and that have good relationships with people in the area. There are many benefits to this. One is that if this real estate agent has been in that area for a while, they might you know, uh, find out about houses on the market before they're even listed. These are called pocket listings, which gives you the advantage of maybe making an offer before it even hits the market, so you don't have to compete with other buyers. You know, the other thing is you want to find an agent who comes with great recommendations. These are people that are going to negotiate on your behalf. They're going to be your eyes and ears. They're really looking out for you. Real estate agents make money on commission, so so there is sort of that aspect of it. But a good real estate agent is going to be mindful of your goals, what you want in a house, and they're not going to just put you in any old house just to sort of get you off their books and go to the next person. And that's something when you're shopping around, definitely get referrals, talk to people about that. How attentive were they? If a home comes on the market that fits your requirements, is that agent quick to show you that house? Because right now we're in a super competitive market where there are sometimes 5, 10 people competing for the same house. So you need an aggressive agent that's on top of things, that's going to really be your sort of right hand person.
Listen, if you only have 5 to 10 people bidding for your home, you're actually in a really good
This
position right now. I don't know about
is
y'all,
true.
but in the DMV
Yeah.
area, like you get 20, 26, 30 offers
Hmm.
really quick
Wow.
down here. So
Yep.
let's talk a little bit about expecting the unexpected, right? So part of
Hmm.
our mission, I've kind of already said, part of our mission at America Saves is to ensure that we're building the financial confidence of our savers because we believe
Hmm.
that a good saver is one that is well informed and empowered to
Hmm.
make great decisions on their own behalf, or to know when to get support from
Yep.
Hmm.
experts like you guys,
Mm.
like how we offer the free financial coaching and counseling, and how we've mentioned already that you can get a housing counselor early in the process for buying your own home. So, thinking about being that confident buyer, there are definitely some things that no matter how confident you are about this process, that will come up that you did not expect. Now, one of the
Yep.
things that I want to circle back to really is kind of getting that property insurance. It's something that you should actually start early to shop for, just like a real estate agent, just like
Hmm.
your lender is your
Mhm.
homeowner's insurance. So let's hear from Doug Heller from the Consumer Federation of America about what to consider when shopping for insurance.
If you're buying a new home, you're going to need to buy homeowners insurance as well. But people tend to ignore this until the very last minute. What often happens is new home buyers are moving through the process, focusing on inspections and other exciting things, and before you know it, it's time to provide your lender with the proof of coverage they require before they'll finalize the purchase. But you have no premium quotes yet, and suddenly it's a rush to get covered, and you don't have time to shop for a good deal. So, once you have an address for your new home, even if you don't take possession for 60 days, go out and get 3 to 5 quotes for coverage, either directly from insurance companies or from an insurance agent you trust. Early shopping is particularly important if you're buying an older home, since some insurers won't cover old homes if certain things like the roof or electrical system have not been upgraded. Also, in many states, your credit score will impact your premium. But not all companies use it to the same extent, so for folks with less than perfect credit, shopping around is even more important. Now, one last point. After you're in your home, if you let your home insurance lapse, your lender will A, find out about it, and B, they'll take out a policy on your home and charge you for it. These so-called force-placed policies are very expensive, so it's very important to keep your own policy paid and up to date.
Thanks so much for sharing all of that with us, Doug. Now, we've talked a lot about red flags. We've talked about what to look for, what to consider, when to start shopping for your mortgage, for your real estate agent, and for your insurance. And so really want you to think about staying in your home long term. Think beyond purchasing and that mortgage and what it's going to take for you to avoid foreclosure. We learned so many lessons from the Great Recession, from people losing their homes. Okay, so really think about, can you afford the home that you are going into long term? You know, is that rate going to adjust? And can you afford any repairs, warranty? We don't want you to be what we call house poor. Okay.
Thanks for joining us today for our Think Like a Saver Town Hall, Buying Your First Home. Use the links, tools, and strategies we've shared throughout today to guide you through the 3 steps of buying your first home: making the decision, preparing for home ownership, and then shopping for a home. Also, remember the 2 additional resources that Kia shared at the beginning of today: free financial counseling or coaching through AFCPE and the Coordinated Assistance Network. Also, the opportunity to win one of 5 $500 prizes in our Think Like a Saver sweepstakes.
That's it for the Buying Your First Home Town Hall. We'd like to give a special thanks to our sponsors whose generous donations helped us bring this event to you. Stay tuned for our next Town Hall in September, Think Like a Saver, Paying for Education, where we'll focus on navigating ways to pay for education that goes beyond student loans. As always, we encourage you to share with us what tips you plan to implement from today's event. Thank you for allowing America Saves to be your savings accountability partner and a trusted resource as you work hard towards your financial goals.